Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. I'm here with
Dan Hussey, everybody.
Dan Hussey, everybody. Today we've got some big stuff to cover. We're looking at European Union responds with tariffs. We're looking at Brooke Rollins talking about HPAI vaccines off the table. We're talking about feeder cattle. We're talking about live cattle. We're talking about bean oil. Dan, we might even talk about an option strategy. Is that right?
That's right. And a lot of what we talk about here today, you can always get in touch with us at ZanerAgHedge.com, as well as in the comment section below. Leave us a like, comment, and talk to us. We've got some of these ideas that we'll be going over today and go in more detail with you.
Before we get started, we want to let you know that if you are interested in hearing about grain market movements and strategies, price action daily, you can sign up for our Ag Hedge Hotline, hosted by expert market strategist Ted Seifert. Totally free, gives you the chance to connect with us personally. If you have any specific questions about the markets or agricultural commodities in general, if you are interested in learning more about how these prices work and how to make them work for you, it's a perfect way to take that first step. Link is in the description below. Sign up for that, totally free, zero commitment. Dan, it's 70-something degrees outside. Is that right?
It is. It's at high 70s right now. I think I clocked 78 by me. What a day we've got. I mean, it's right out of the freezer into the frying pan, kind of, as they say. This isn't abnormally, warm for this time of year. I'm not going to all of a sudden go out there and say, oh my gosh, right, we've got a scorcher already, but uncharacteristically warm on during the Ides of March right now.
I had to yesterday climb up a ladder into a tree and chop down a branch that housed a wasp nest, paper wasp nest. It's left over from last year. Late in the season, my neighbor called and said, "You are not going to believe the giant wasp nest hanging from one of your trees." Dan, I don't spend a lot of time looking up into my trees. And of course, went outside and there it was, as God is my witness, as big as my head. I got a picture of it here on the phone.
Dormant inside of it?
Not in this nest.
I know nothing about the
There's
lifespan.
some debate. There's some debate that maybe they come back and reuse it. Some folks say they never ever come back. Some folks say that the queen and 5 of her good buddies hang out all winter. So there was some nervousness as Max and I, Max holding, intrepid as ever, holding the ladder while I was up 2 stories to chop this darn giant nest down. But then when it hit when they chopped the branch and then the whole nest just fell and kind of hit the middle of the ladder, that was kind of the moment of truth, and no wasps came out. And so we kind of breathed a sigh of relief and went on about our business. But man, that thing was monstrous. I had never seen anything like that in person.
I believe it. I've never seen one myself. We had a little bit of a bee or wasp nest out front of my place last year too, but nothing like what you're talking about. Mine was taken care of with just some spray.
Maybe I should have just left it and the wind could have taken care of it. Guys talking about 80-mile-an-hour winds today. Have you heard about that? Are you having any 80-mile-an-hour winds out where you're at now?
Definitely not 80 mile an hour. Certainly strong gusts. I'd say at least 10 to 15 mile an hour gusts, though.
Goodness gracious.
But you can't complain. I mean, at least for this, but 80 mile an hour gusts, that starts to get a little more temperamental for the weather.
All the lawn furniture that maybe folks race to get out here today won't be there tomorrow morning, maybe, if it happens, huh? Goodness
and
gracious.
I would imagine, though, this weekend's probably going to see a lot of that. I don't want to say spring cleaning, but the summer is here. People are getting outside, putting stuff out there. Yeah, I mean, some winter is gone. I think that's the moral of the story.
Should we jump into these? Should we jump into the moral of these news stories?
Yeah, they're quick and easy, and then we'll finish with some good numbers where we finish the week and some strategy to take home.
European Union responds with tariffs on soybeans, other ag exports. Chris Clayton from DTN says Europe's response comes after President Trump put in place 25% tariffs on all steel and aluminum imports. Ursula von der Leyen, president of the European Union, said the U.S. tariffs would impact about $28 billion in European exports, so the EU tariffs would fall in line there. The EU tariffs right now would go into effect on April 1st. The top 5 U.S. agricultural and related products exported to the European Union by value are beans, $3 billion, almonds, $1.2 billion, pistachios, $689 million, Gets a little serious here. Whiskey's 533 million, and food preparation products at 521 million. Beans, almonds, distilled spirits, food preparation products, dairy, and pork products are all on the list for tariffs. Europe buys roughly 238 million bushels, which is 6.5 million metric tons of soybeans and soy meal exports, or about $3 billion in value. For the current marketing year, which began September 1st, European countries have bought 4.5 million metric tons of beans, up 710,000 metric tons from the same period last year. Spain, Netherlands, Germany are the largest buyers, according to the USDA data. Overall, the U.S. carries a large agricultural trade imbalance with the EU, importing an average of 36 billion in ag products while exporting about 13 billion. Let me read that for my benefit. Overall, the U.S. carries a large ag trade imbalance with the EU, meaning a trade deficit, importing an average of 36 billion from the EU while only exporting about 13 billion, I think is the right way to read that. Very interesting.
Yeah, very interesting, right? And it makes you wonder, these tariff talks that we've had across the world over the last several weeks, because right, it seems like every continent is getting hit with some kind of talk with this administration. We've seen some positivity on other fronts, and it just seems to be Europe's time, right, to come to the negotiating table with the Trump administration now, right? Canada, Mexico, our neighbors to the north and the south, and Colombia already have, engaged with the president and his administration on this front. China even starting to come in here. It's going to be interesting to see how this plays out, right? Not a great thing for any of our export markets if they're, the import costs now in the countries where those things are heading to have now risen.
Some talk this week that, and this is not a news story, just saw in the news some talk that the Chinese and U.S. are engaging at low levels, which is certainly productive. That they're even engaging at all.
Absolutely. And we've seen some interesting, developments in like the soy oil export front and then destinations taking, I think, darn near 100 million metric tons already this year in flash sales. That's uncharacteristic for soy oil. I think they're up. Their imports, our U.S. exports right now on it are up like they got 1,500% or something. I think that's mainly because China typically takes soybeans on destinations, assume being China here, and they don't take that value. They want the value out of the crush themselves. So. It's interesting to see how it doesn't reflect it maybe so much on the price of the price chart, but, developments around the world of tariffs going into effect, in the EU, China still potentially buying some products from underneath the table or right from underneath our feet. They're over the table, right? While there's, other turmoil in South America with, soy crushing strikes potentially on the table. It was the 15-minute strike, I think you said earlier today?
Yeah, it didn't last very long.
No, it didn't. It didn't. But anyway, our next story here comes in regards to Ag Secretary Brooke Rollins, who's taken that HPAI vaccine off the table. Corey McGough from RFT-TV reports for us. Vaccines are off the table in a fight against the avian flu, as Ag Secretary Brooke Rollins said. Instead, her USDA will focus on the repopulation of those animals. So that's a good strategy. Roland says that the administration will prioritize and biosecurity portions of their 5-point strategy. Vaccines are a pillar of the original plan, but Roland says that she has since spoken with the industry leaders. She now believes that they're ineffective and haven't worked well in places like Mexico. President Trump has previously blamed high ag prices on bad policy from the Biden administration, and Rollins agrees. She says that they knew about the problem for years but failed to address it. And of course, the problem would be the buildup of the avian flu. And then the plan to effectively just needed to lower chicken populations, right? Leading to inflation is the idea there. It is interesting to note on this story front, and it's nice to see, I guess, that if you're not loving what, genetic engineering, or I shouldn't say genetic, but vaccine engineering is doing to our food, obviously a win for people who are on that front. But, we got to consider, right, the poultry. And it's interesting that in the rest of this world, we haven't really had the epidemic that we had here in the U.S. that led to now a lower chicken population. So vaccines off the table.
Off the table. But repopulation, I would guess that if they were aggressive with that and aggressive with the biosecurity, it's been rather, I hate to use the word disappointing, but it seems to me like maybe some of this could have been better controlled with more aggressive biosecurity. Hard for me to say, as I'm not directly in that business, but we seem to have had kind of an outsized impact, as you mentioned, here in the United States versus other places.
It seems that way.
So that's been that's rather challenging. Strolled through the grocery the other night, and they would like you to pay $6 for a dozen eggs. I just thought, wow,
that's still uncharacteristically high even around me. It was like 578 at Aldi's. I just actually shopped there recently, and they do say over the last couple of weeks, egg prices have come down. They never really shot up to that $8 mark in my area. At least I never paid that or saw that. For some premium brands, maybe, but they're saying, you can see that on the news and social media making the rounds that, hey, egg prices are actually off their highs, which all true is probably going to be the trend is, hey, if repopulation is the strategy here, what is it? I know it's 6 to 8 weeks to get a broiler from egg to slaughter effectively, but I believe hens are more around that 20-week mark. So, it's going to be a repopulation, time game as well. So it'll be interesting. I think once egg prices finally have subsided and that supply hits the market, we'll know we're past that 20-week mark for hens coming to maturity.
20 weeks, you say, is what it takes, because I'm going to pencil in. That's
what I've heard.
I'm going to pencil in maybe going out to get an omelet, and if I got to wait 20 weeks, where does that put us? That's good. Is that August, when we can finally sit down and maybe have some omelets or some scrambled eggs? Hopefully there won't be any vegetable flu to impact the population of green peppers and onions.
Oh no. Well, they'll try it if they want to, right? What can you say?
What kind of omelet are you going to take if you're going to get out and get that hangover breakfast, and you're going to get an omelet that's as big as the entire plate? What's going to be?
I'm more an Eggs Benedict guy personally.
Of course, Chicago suburbs.
Like
yeah, fancy Chicago suburbs, no doubt about it.
It's a vehicle for butter, is what it is.
Absolutely, Eggs Benedict. That's very. It is very fancy. Deanne, what do you think about this corn? We opened the week at 469.5. The high was 477.5. Low trade 456.25. Last trade 458.5. Down 10.75. Funds still long 248,000. Look to me now. All of this technical price action, except of course for the meats, just sort of strikes as hangover post dramatic decline or post nonstop news headlines. I really don't see anything. Help me find something interesting in this corn chart. We're trapped in between the 100 and the 200, 465 in the 100 and 455 in the 200. Am I right about that?
Yeah, that's correct.
Between those two moving averages.
It stinks that like the best thing you can say about a chart, particularly for May corn and just these corns that matter too, is that, at least it's not, flushing the lows. At least it's not, making that big move yet being the key word. It is interesting though that we came down to test that upward sloping trend line against the low in December or in May corn. I believe it tested in December corn too, but really focusing on May corn, there's been a trend line against the lows in that market since we're going back to contract lows that we came down and tested. The 200-day, like Joe said, has been held as support this week. I mean, okay, that's the best thing you can say is you're above those two levels. I guess that's a short-term win, as we did come out of oversold territory late last week when we made our low, rallied up, couldn't make any follow through, but definitely had a series of higher highs and higher lows for day over day. But watching the market pull back and give back almost 50 or maybe even over 50% of those gains from the recent low. Not a good look for the market. 18-day moving average still above at 477.50 and 55-day above that around the 484 or 485 area. And that's about a 50% from the, in the entire decline. So, hey, you hold the 200-day, you hold that upward sloping trend line, we can get up into that 55-day moving average, right? And above there, talk about new highs. I think the best thing you could say about this chart is that at least it didn't follow and puke, right? Like if it's hung over, at least it's not over the porcelain god paying homage right now and puking through the lows and holding that 200-day.
Not quite an unprecedented move lower last week, but kind of a unprecedented. I guess that was the second biggest offsetting of fund contracts ever, where they by and large got rid of, disposed of was the word I was looking for, disposed of over 100,000 contracts, or almost 100,000 contracts in a very short period of time. And you can see on the chart what has resulted from that. And so now the question is, do they continue to dispose of those long contracts, or do they begin to add? Looks to me from the last couple of days that maybe they're back on the bid. How about you?
Yeah. No, I would tend to agree with you. The volume that we saw, was a decent set of volume that took us from March 1st. And this is the start of that May contract, real volume on it. The peak in volume, I should say, and open interest on that contract was into the start of March. Since then, we've seen waning volume and activity in this pullback, which suggests if they can hold some major levels as they potentially are, you start to see short covering and the bid continue to take you through highs, this thing gets a little more optimistic, right? And that would be in the short term, the kind of activity you'd be looking for. This brings to call for me the idea that, hey, even though we're this far down, if 440, 460, or let's look out to December corn, the 450 area is someplace you need to protect for profitability. There's a strategy and idea here where you can be buying a put and then selling a call above, I don't know, throw it out, further up around the $5 mark, perhaps in December corn. If you can bring in some premium, which I'm bringing it up now just to take a look where we settled on it. If you can bring in some premium up there to help pay for having a floor in 450, you've effectively given yourself some upside on the board price, as well as, 450 or $5 corn still being a potential upside target for your marketing year. And hey, bringing in, it looks like the $5 call sold around 20 cents. So, you're paying for 20 out of the 32 cents it would have cost you to buy that put here. So for a net 12-cent cost, you can still have that floor and that protective strike in an option in December corn for the next 252 days. And so, while I'm cautiously optimistic that corn could bounce from these big levels, this is a strategy that still helps you afford that insurance policy to the downside, does a little bit of reownership via that short call, in the actual strategy itself, but can protect any of the unsold bushels you still have this year.
And what do we call that? Risk reversal?
A risk reversal, a collar strategy, right? And it's basically right a collar you set on the market, a short call and a long put against a long futures or a cash position, of course, because we're talking about this in terms of a hedge. This isn't a real speculative type trade, but it allows the producer to actually help afford put that floor in price, and it can move. The market goes up 20 cents tomorrow, you just ratchet it up. If it goes lower, you ratchet it down. And so long as the put you're buying makes sense to your marketing plan for protective put option, this is a way to help bring down the cost for doing that.
That's beautiful. I was thinking about last week where we were talking about options trading and we kind of flew through it kind of rapidly. And I came away from the discussion thinking, okay, maybe we should have explained that just a little bit better at the beginning for folks who maybe had never heard of it before. But in this case, what we're talking about is buying a put to protect the downside, and we're going to sell the call to the upside to use that premium to help pay for the put.
That's absolutely right.
Now, on its face,
absolutely right.
Just those two positions, you would think, okay, selling that call might be a little risky, but this is a strategy that would be employed by people that have a cash position. And so worst case scenario, if the market rallies, you're simply capped at that level where you sold the call.
And, I will admit this is a type of strategy that even somebody simply long a futures contract could use. The long futures replacing the physical cash position, right? If you want to mitigate risk on a long futures position, a collar risk reversal strategy is a way of doing so while still leaving some upside, and positive delta, as we call it, to the upside open for you.
Beans opened the week 10.29 1/4. High was 10.32 1/2. Low trade 9.94, which is notable. Last trade was 10.16. That was down 9 on the week. Not quite dismal, but not great. Funds are short. 29,000 contracts. We held above the previous week's low of 991. That 994, not a bad performance in terms of, as you mentioned, we're not seeing that aggressive attack for new lows. But you look at that chart, Tell me what you see here. What I saw when I looked at that chart is we have a lot of work to do to get back into comfortably bullish territory. We got to get out above the 100-day at 1028
There's
and
a
a
lot
quarter
of
at the
moving
very
averages
least.
and things you got to get above.
Yeah. So that 101, I just grabbed one.
Mm-hmm. Yeah, you were about to say, I think the 100 at 1027, the 18 days right there too. A downward sloping trend line against the highs, which is pretty much looks like the 18-day moving average, as well as the 50 and 55-day at 1040. Just a spaghetti bowl of resistance there to break back through.
You know it. Meal, we were talking about meal. Opened the week 305, high 309.80, low 298.60. Last trade 305.90. That's up 150. Short 57,000 contracts in meal, and they appear to be rather comfortable staying short meal. That has me a little concerned. I thought that funds were on the bid in beans and that maybe we could see them rebuild this long position, but so far not quite the case, and comfortably short here in meal, wouldn't you say?
Yeah, still short. I mean, I think that some of that short position can end up becoming, a reason for the rally, so to speak, but you need to see that volume prove it. You need to see that. You need to see the participation in the market that proves that, right? Otherwise, they could get more short here or shorter, right? For lack of a better tense.
Do you feel, and this is just two guys talking, do you feel that we are handing back some meal exports, right? Export sales for meal were not great. And no. Maybe versus last year, where last year we were kind of filling in for Argentina. Argentina had some difficulty. That is the world's premier meal exporter, if I remember correctly.
That's correct.
And so now maybe what we're seeing
in general, yeah.
Right. And so now what we're seeing is we're handing those exports back to Argentina, recapturing market share while we're giving up a little bit. I've heard anecdotally some processors having trouble moving meal, not quite sure where it's going to go. It's starting to stack up. I'm interested to see how that plays out.
And I think that, if we get back to our news stories today, there's a lateral idea here, which is their prices are cheap. They want to rebuild a herd and repopulate. We have some of the tightest cattle numbers we've had in terms of herd populations in generations. You could say the same about chickens too. We took a lot. There are fewer fewer relative, animal mouths being fed here off of that U.S. demand, right? The feed demand here is lower than maybe where it could become this year. So I see the silver lining in this kind of dismal economic outlook for soy meal, right? Which is not, weak exports and giving some back to other places in the world. We could see domestic demand over the next year or two really pick up for feed. And I think that that's a positive, silver lining to the story for meal right now. But you're right. You want to see it on the chart. We want to see the follow through highs of today or yesterday, which would put us through to a new high for the month for meal. That's positive. But, when you take a larger
meal
step
chart
back,
doesn't
you
look
realize
terrible,
how far down No, it doesn't. It's making a swing higher high and higher low. And I think it looks positive for the month of May or March so far, but it's got a long way back up to go, right? And you want to see it get through the 310 highs of this month area. Oil not doing much to help. I think you got the canola being limit down and just falling through the floor this week off of Canadian issued tariffs from China and the US. Not a good look. On the oil seed area, side, it seems like Canadian oil or canola will be free here soon. And that's, I think, weighing on the shoulders of the soy oil here. But
we opened the week at 43.52. The high was 43.55. Low was 41.08. Last trade 41.59, down 183. Oil, they're long, just 3,000 contracts. That chart does not look great, but you and I were talking. We saw some pretty great export numbers, right?
Yeah, and uncharacteristic, right, of soy oil to see exports. China isn't giving the value add to soybeans right now. It seems like via unknown destinations. It could be anywhere, but somebody's buying a significant amount of U.S. soy oil on the export market. It's not gonna carry I think the trade imbalances just yet if there's demand for it because again now Canadian canola is going to be hitting the market at discount. But we are holding that upward sloping trend line since August still on the soy oil in a giant 41 to 49, just call it a 40 to 50 range right now on that market. So, okay, you start to see the short-term reasons for a reversal. Great. Maybe they turn into a swing back up in the larger range we've been in. But watch out for that 41 handle Because if the market gives way there, it just looks like, we'll be heading significantly lower.
Yeah. Yeah. How about wheat? Speaking of significantly lower, open the week at 554 and a quarter, high 566 and three quarters, low 546 and a half. Last trade 557. That was up 5 and three quarters on the week. They're short 57,000 contracts there. 10-day 553, 18-day 567 and three quarters. What else can we say about wheat? Appears to have checked up.
Yeah, yesterday was the day I was really hoping to see Chicago wheat break through that 18-day moving average, through the highs of the week, through the 55-day, and kind of make a run for it, because you had such good participation on this, like, kind of move higher. Today took a little bit of wind out of the sails of the market there. Casey Hard Red Winter made a better showing. I mean, I think there's a tail in wheat here in the spread market still. Casey Chicago spread is still trending higher. That has hit, let me bring up the May here real quick. But that Casey Chicago spread, as well as the Chicago wheat to corn spreads, have been trending higher week over week. And that's something we're up 4 3/4 cents there on the day on that Casey Hard Red Winter to Chicago on the day. The corn to wheat ratio up also 1.50 there. So wheat seems to be holding on better than the rest of our row crops at the time, for the time being. I just wish we would have seen a little bit more follow through from yesterday's price action to finish the week stronger.
Finish the week stronger. How about live cattle? Speaking of finish the week stronger, live cattle in April opened at 280, 200.80, high 203.62 and a half, low 199.05. Last trade 203.17 and a half, up a whopping 290 on the week. After last Friday's blast off, we continue to see April live cattle making new highs in a new week. Funds are adding to positions, and it doesn't seem like anything can stop this live cattle contract.
It takes a lot of time to get a cattle, animal to that weight and compete, to be sold on the market to satisfy demand, right? I think that's the moral of the story here. But feeders being the leaders, I know you got the numbers on them. I mean, they really kicked off the rally from the 18-day moving average at the start of the month. And, fat cattle have just been dragged up. If you press out to that June, they're right up to that 200 figure. I wonder if June wants to get a taste above and make a new contract high for June. That's kind of the level I'm looking for, that blow off top. I think that would probably push April to that 208 figure as well. But today, right, it looked like the market could roll over. We're definitely came off or in overbought conditions, but they just keep putting it back up. It's the beach ball that can't stay underwater right now.
You know it. April feeders opened the week at 278.52 and a half. The high was 282.35, low 276.07 and a half. Last trade 281.20, and that was up 305. And feeders are leading and leading. Boy, oh boy, are they leading, right? I mean, both in fats and feeders, we're within shooting distance of those highs. Feeders, these are new highs this week. These are not.
Yes,
we're not
feeders
trying
are
to get
making
the
new highs, right?
These are the new highs.
Every day they're proving something new and doing the unheard of, right? And this party will eventually come to a close, no doubt, right? I mean, the answer for high prices is high prices.
Theoretically, cattle complex doing everything they can, right?
Here.
Yeah, cattle complex doing everything they can to test that out.
And I think a lot of our exports now are going to be in question, right, because of tariffs around the world, like the EU, for example. And I think China also, I heard rumors that they had canceled, a lot of beef orders as well. So, and now maybe looking to only source from Canada and Brazil. Okay, this means we're going to arbitrage our beef and production to other places that was going there anyway, I'm sure. However, in the short term, right, the processors and the processors and the feedlots, they got to play that game of ebb and flow with margins. And, I think we're finding out how high we can go at this point. It's, the only way to put it. Don't try to pick a top in this market. It's certainly a time to do some hedging and get some sales done. But I say don't pick a top from a speculative standpoint, because the market can stay irrational and keep heading higher longer than a short could stay liquid. But boy, oh boy, if I had cattle to sell or was a producer myself, I'd be looking to take advantage of these prices while we can.
I'll bet. I'll bet that is exactly right. Dan, let's let folks know if they want to talk about that option strategy that we discussed earlier, if they want to take a closer look at their risk tolerance or their individual operations versus what it takes to put that strategy up or the appropriateness of that strategy. All they got to do is call us, right? Or there is a spot on the ZanerAgHedge.com website where they can sign up and say, hey, call me up and let's get some information going here. Am I right about that?
That's right. The information is always free. You can always get in contact with us on social media. Visit at ZanerAgHedge.com. We're here to talk, bring the ideas that we're talking about today to table and make them a strategy for you. That's why we're in business.
Folks really wanted to talk with you at Commodity Classic about different strategies and about their risk profiles. And that was the prescription then as well, right? Hey, just take a moment or get us your contact info. And when the time is right, we'll get in touch with you directly and we can have a conversation the old fashioned way, just two people talking it out. And that has really worked well for a lot of our customers and a lot of our prospective customers, hasn't it?
It has. And I think that's where the value, right, of having somebody to call and talk to that can walk you through these ideas and these and strategies that will work well for you, right? We're not talking a blanket marketing strategy just to apply to everyone because everyone's needs and risk tolerance levels are completely different, right? Corn hedging in Minnesota or in North Dakota, those are going to be very different. Is not going to be the same, down along the Mississippi and Missouri. So, we're here to help take these ideas and tailor them to exactly what you're looking for. Plus, right, try to give you some insight into what's going on in the agriculture world.
How about the question of the week?
Let's see what Carter had to ask. Producer
Carter offers, what is your favorite flavor of pie? Because today, of course,
3.14 Pie Day.
Pie Day. Yep.
I'm a French apple pie American, just as it gets, just apple pie all day, all that's it for me.
Nothing wrong with that. I'm trying to think of a flavor of pie. It would be a shorter question. What flavor of pie won't I eat? You know what I mean? So I'm pretty much non-discriminating when it comes to, if you've got a freshly baked pie, I can't imagine what you could put in it. Blackbirds, that never really appealed to me when they told you that story as a kid. There's birds in this pie. I never thought that sounded very appetizing. But some cherries, some blueberries, some apple. Did you say French apple?
Yes.
French apple. That's not
sugar
exactly.
Addict.
Yeah.
It's
French
got that
apple.
Sugary crumble on top.
Why is it French? I wonder. You know what I mean? Seems to me like
I don't know. Apple pie, right? This is American as it gets.
Apple pie. Do we say cherry pie? What about rhubarb? Would you eat any rhubarb pie?
I feel like I've actually had it, like fresh made from someone's garden, because that's a very like Midwest, kind of Midwest pie to make. Like people just grab the rhubarb that's naturally growing, in your backyard. I definitely have had it before, but not my favorite. A little too tart for me.
Yeah, I can't remember if I've ever had it. I'm sure I would try it. But I guess that's
it reminds me of like strawberry. It's really tart strawberry pie, even though it's not strawberry, right?
I'd eat that then. French silk, the chocolate.
Man, not my style. Not my style.
All right.
Give me some apple pie, man.
It's really, really sweet, isn't it? Really sweet. I'd still eat that. Pumpkin?
My sister's big into it though.
Pumpkin? Yeah.
Yeah.
Yeah. Well, we'll eat some pie. No doubt about it. I think that's the answer to that. Yep. That's all the pie talk we got on Pie Day. Do we miss anything?
Well, thank you for listening to Zaner MarketCast today. If you need more because you just can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge or on Twitter and LinkedIn at the Zaner Group. If you have a question you want answered right here on the air, fill out a comment, fill out the link, get a comment on air with us, and we'll get it answered for you. Thanks again for being here. Be sure to like, comment, and drop us a follow to not miss a beat. And we'll be back with you as price action develops. Have a great weekend, everybody.
Good weekend, everybody. Thank you.